Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Handtech Markets for Thursday the 27th of March. I'm going to move on now to cable for sterling dollar, and to be honest we're getting a few mixed signals on this chart at the moment. Sterling has held up fairly well in the last few days. That's actually formed a bit of a recovery. It's actually held also onto this 89-day moving average. So we now need to be certainly watching that as the basis of support. 64.88 that currently comes in, but the reaction to the upside has probably just only unwound to the key resistance of the neckline of this big top pattern here. That's still, I think, dominating the near to medium term picture. That currently comes in at 65.81, about 65.80. And you've also got the 21-day moving average, which has provided the basis of resistance for the last few rallies. So that currently comes in at 66.19, and that's falling away. So you're sort of getting a few mixed signals on this cable chart on the daily basis. You've got the momentum indicators that, to be honest, also reflecting the mixed signals. The RSI sort of fell away and sort of moved into negative configuration, rallied strongly as the last few days have seen, but now fell away again around about that 50 mark. So that's not all that positive as a move. The MACD lines are sort of pushing into negative configuration now, but the mixed signal comes with the stochastics, which are in recovery mode. So not entirely conclusive exactly on what is happening on cable at the moment. I think this chart is reflective of that, certainly the move in the last few days. This is the intraday position. We talked yesterday about this downtrend that had been in place. That has now been broken to the upside, as also has the 200-hour moving average, which, to be honest, was sort of always tended to be broken slightly to the upside. So that was not necessarily to be unexpected, but I think you need to be certainly watching out for these Fibonacci retracement levels on this chart. 61.8, 64.69 basically was the support. Then 50% became the resistance. That broke to the upside. Now 38.2 at 66.03. That number that I used to talk about a few weeks back, that now could become the basis of resistance. So we need to be watching out for these Fibonacci levels, I think, and they could be certainly pivot levels on this chart on an intraday basis. Cable latterly is falling away slightly, has been falling away overnight following on from that strong rally yesterday. The outlook, as I said, is fairly mixed. I still have a tendency to believe that this rally is just a chance to sell, with my mind still on that daily chart and the top pattern with the neckline at 65.80 in place. So I would be certainly considering that when you'd be if you're opting to go long. The momentum indicators have all turned lower, and I don't know. I still think that this chart gives me the impression that we're going to be going. That we are going to be going long. They are going to be coming shorter, and pressure is to the downside. There's a lot of overhead supply around this $1.66 big figure mark, and I think that could ultimately weigh on cable and pull it lower once more. Anyway, I wish you good luck in your trading of cable. There are several pieces of data out today that could have an impact on this chart. Retail sales for the UK at 9:30 GMT. You've also got the key dollar driving announcements from the US at 12:30 for GDP, and also weekly jobless claims. So that's my outlook for cable today. I wish you good luck in your trading of it, and I will speak to you later. Thank you.